Welcome back, guys, to another episode of Venture Group Media. Today, let's discuss the understanding and importance of deed, title, and title insurance. But before we begin, please like and subscribe so you can circle back to this video at any time. What is a deed? A deed is a document used to transfer title from one party to another. Deeds are the most common document used to transfer title. The parties to a deed are the grantor, which is the party conveying ownership, and the grantee, which is the party receiving the ownership. A deed must meet 5 requirements to be valid. It must be in writing. It must name the parties. It must give the legal description of the property. It must specify the legal rights being conveyed, and it must include consideration or anything of legal value. The sales price is not required and rarely ever included because it's not a contract between the buyer and the seller. It's a way for the grantor to fulfill the intent to transfer the property. In some states, deeds don't even require consideration amount to be shown at all. To avoid title disputes, it's recommended to include an amount. $10 and other good valuable consideration is most often used in a deed and must be signed by the competent grantor and witnessed by 2 persons. The grantee is not required to sign the deed. Deeds may be, but not necessarily, under seal. A deed under seal is a formal contract or deed that uses a seal or stamp to indicate its importance and authenticity. Deeds under seal are often used in real estate transactions, loan agreements, and other formal legal documents. Title does not transfer until the deed is delivered to and accepted by the grantee. Deeds do not have to be acknowledged or notarized or recorded to be valid. However, no document may be recorded unless it is acknowledged or notarized. While deeds may have several clauses, each of which performs a separate function or provides specified information, the premise clause, also known as the granting clause, is the only legally necessary clause required in a deed. The difference among the various types of deeds are only in the promises the grantor is willing to make to the grantee. Most deeds contain covenants or warranties, which are promises the grantor makes to the grantee. The difference in the type and number of warrants and covenants is what differentiates one deed from another. All deeds convey title equally well. The 4 basic types of deeds are quitclaim deed, bargain and sale deed, special warranty deed, and general warranty deed. There are also certain types of special circumstance deeds, but they're not important for the purpose of this video. A quitclaim deed contains no warrants of any kind. They are rarely used in day-to-day sales and transfer of ownership, and most oftentimes are associated with divorce actions where one spouse quitclaims his or her interest to the other spouse, but it can also be used to cure defects in title. In a bargain and sale deed, the grantor makes no promise to defend the title if problems should arise later and contains the only necessary warrant of the claim of ownership. The special warranty deed offers protection to the grantee for claims only made by the grantor. The general warranty deed is the most common type of deed and provides the best protection to the grantee of any deed where the grantor promises to defend the title against any and all claims. Now, we should have a much better understanding as to exactly what a deed is. So now what is title? Title is the evidence of lawful property ownership. By holding title, you or those whom share the title have legal ownership rights and bear responsibility over that home. Title insurance is a form of insurance that protects lenders and home buyers from financial loss sustained from defects in the title to a property. Title insurance is a non-transferable one-time purchase made during the settlement and closing process of buying a home that offers you security against unforeseen circumstances that could infringe upon or even revoke your ownership rights. The causes of these title defects are numerous and wide-ranging. The most common type of title insurance is owner's title insurance, which may be paid for by either the buyer or the home seller to protect the buyer's ownership rights in the property and to assure the buyer that any title issues related to past events do not become problems in the future. The other type is lender's title insurance, which the borrower purchases to protect the lender's equity lien position in the property. This form of title insurance is often a requirement from the lender to procure the loan. According to the American Land Title Association, more than 1/3 of all title searches reveal a problem that title professionals fix before you go to closing. A preliminary title insurance report is provided prior to the issuance of a new title insurance policy to determine the status of title to the property, any liens recorded against the property, as well as any items that need to be cleared in order to proceed with the sale. The preliminary title report will show what title considerations you will need to take with you when you buy the property. When reviewing this report, look for the following and ensure that they are correct: the type of title insurance offered, lenders versus owners, exclusions and exemptions from coverage, the property addresses and legal description, current title type held on the property, and matters of record specifically affecting the subject property or its owners. Now, what exactly is the difference between a title and a deed? They are different, however, they deal with the same concept of home ownership. The biggest difference between a deed and a title is physical. The deed is an official written document declaring a person's legal ownership of a property, while a title refers to the intangible concept of ownership rights. A warranty deed, which is just one type of deed as discussed before, is a legal document that transfers property ownership from a seller to a buyer. Included in this transfer is a guarantee that the buyer will receive what the seller said to be sold. In a deed, you will find a legal description of the property, including any property lines, the name of the seller, the name of the buyer, and the seller's signatures to make the document legal. It is important to note that there is a difference between transferring ownership between personal property and real property. Personal property includes things like a boat or a car, while real property is the physical, tangible land and anything affixed to it, like a house or a building. This is why in the legal sale and purchase of real property, the title transfers to the buyer along with the deed. Now, exactly how is title determined? A title search is an examination of public records to determine and confirm a property's legal ownership. It also identifies if there are any claims on the property that may be settled prior to or potentially prohibiting transfer to the new owner. A claim in this sense can be thought of as a statement from an entity or person that is not the current title owner declaring some type of right to the property. Claims that might come up in a title search include liens, ownership, rights, encroachments, or forgery. A lien is a legal right or claim against a property by a creditor. Ownership rights encompass the ability to enforce legal rights concerning the property, including the right to possess it, use it, exclude others from it, and transfer it to someone else. In the case of married couples, most states use the common law, where the name on the deed, registration document, or other title paper indicates the owner or owners. In community property, money earned by either spouse during the marriage and all property bought with those earnings are considered community property that is owned equally by husband and wife. For example, if you were married in a different country and didn't realize it, it counts in America too, which means your spouse potentially has the rights to an ownership of property here as well. Florida is not a community property state, however. Florida is an equitable distribution state. There are 9 community property states: Louisiana, Texas, New Mexico, Arizona, Nevada, California, Idaho, Washington, and Wisconsin. What is an encroachment exactly? Let's say a neighbor builds something that's either partially or wholly on your property without an agreement. For example, you went on vacation, and while you were gone, your neighbor built a fence that crosses the property line. We all know what a forgery is: making, altering, use, or possession of false writing to deceive another. Say someone pretends to be you and takes a mortgage out on your property. While the title company makes every attempt to find and remedy any potential claims, title examination is not a perfect science. It can be saddled with human error and changing legal interpretations, which make 100% risk elimination impossible. This is exactly why title insurance is so important. If claims arise, your title provider will step in and handle them according to the terms of your policy. I have a broker's license in the state of Florida, and this is where I'm familiar with our prevailing customs. Always seek the advice of a local professional for advice in your personal situation in your market. If you found any of this information informative or helpful, please like and subscribe. Thank you, and I'll see you in the next video.